Good afternoon, everyone. This is Henry Gambell with simplertrading.com, and in tonight's free video, I wanted to bring you an idea in Peloton that uses a confluence of analysis, a couple different resources that I like to use for my trading, and hopefully an idea that you can take with you into Wednesday, manage it through Friday, and just a short little 3-day turnaround. So what I'm looking at is Peloton. So again, this stock up about 3% on a day where the Nasdaq and S&Ps really had some pretty decent selling, and I think that just helps maybe solidify the idea that this will be a good area of support. You can see that we came down into about the 108 handle previously and got a pretty sharp short covering move, right? Really ignited up here into 125. Well, yesterday on Monday's weakness, you come down and you take out that low, form a doji, so it gives us a little bit of indecision, and then today, a nice move higher. So I'm trying to think that the low for this week is in. That's kind of foundation piece number one, and that at the very least, we will hold a bid as we approach the company's earnings next week. Okay, if we can see a little bit more of a bid, and what I would prefer to see to trigger me into this trade tomorrow is that you see Peloton move up in towards max pain. So there's a few ways that you can gather this value, but looking at Peloton for the August monthly expiration, you can see that max pain is at $115. So if we jump up and tomorrow we happen to be trading right here around this 115 area, this is where I bring you the trade from. This is from my friends over at the CML Trade Machine. And as I was running this through some of the back tests that they do, I found this one for Peloton. You've got the 3-day pre-earnings momentum. That should be a little bit more in play next week. But the one I want you to look at right here is this 6-day pre-earnings volatility scalp. And what you're looking at doing is bringing in very modest gains, right? This is not a type of trade where you're trying for a home run or anything of the sort. But what you are doing is basically selling the front month straddle and then buying next week's. So you can see some of the previous results there when Peloton was trading at different prices. But basically what this is to tell you is that over the course of the past year, you've seen this strategy, or past 7 instances, you've had 5 wins and 2 losses with an average return of 25%. Now what you're looking at doing, again, is the move up into max pain around 115, thinking it will trade sideways there, and then you're selling the 115 straddle to help mitigate that risk. You then buy the 115 in this series that will revolve around earnings. So the idea is that for 3 days, you just chop around 115, inflicting the most amount of pain on those August option holders, right? The monthly series. And then ideally on Friday, when you're closing somewhere close to 115, then you close down the entire spread, buying back the shorter dated short straddle, and then also closing out this one back here, which may lose a little bit of value, but ultimately it is there to help define your risk. And so you don't have all of the risk that would be just the short straddle alone. So I think that's a couple factors in there, a strategy that has proven itself useful in the past, a move up into what could be an area of consolidation for a monthly expiration. And I think that's a great place to try and think a little bit more about strategy over direction, try to factor in a few helpful pieces into that puzzle. And I think that'll help give you a good trade setup into the end of the week. So I hope that's helpful. Have a great rest of your evening, and we will see you at the next free video.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me